presenter for today are ELEENA NURFATHISYA binti Muhammad SAIFUL, AFIQAH binti ZAKARIA, HAYATI binti SALLEH, and also NADIAH binti ZUBER.
This is the company background of Pakul Berhad. Pakul Berhad is a private company limited by shares. It was incorporated on 7 May 2006 under the Companies Act 1965. Upon conversion into a public company in 1989, the name was changed to Garden World Berhad within 2006 to 2009 and subsequently to Universal Malaysia Berhad. In 1989, Universal Berhad and Universal Malaysia underwent a restructuring exercise which resulted in Universal Malaysia acquiring from Universal Berhad its entire gaming, hotel and resort-related operations, inclusive the goodwill and other relevant assets. Universal Malaysia's shares have been traded on the main market of Bursa Malaysia since its listing on 22 December 1989. Next, our company vision is we are a leading multinational corporation committed to enhancing shareholder value and maintaining long-term sustainable growth in our core businesses. For our mission, we will be first responsive to the changing demands of our customers and excel in providing quality products and services. Second, be committed to innovation and the adoption of new technology to achieve competitive advantage. Third, pursue personal policies which recognize and reward performance and contributions of employees and provide proper training, development, and opportunities for career development. And lastly, generate a fair return to shareholders. This is the management approach. Factors to be considered in preparing a segmental report. First, nature of the product or services. There are leisure and hospitality, plantation, property and development, oil and gas, and power energy. Second factors is type of class of the customer for product or services. The target customer are from middle-aged individuals between 30 to 50 and upper income group. Also kids and teenagers for the theme park. Third factor, the method used to distribute their products and services. Pakul Berhad use online marketing and other IT facilities to promote the company. They also have a VIP cards for the customer that choose the plan that the company provide and give a discounts to the first-timer customers. Lastly, the factor is the nature of regulatory environment. The company comply with anti-corruption and anti-competition legislation and other co-operational regulations.
Assalamualaikum warahmatullahi wabarakatuh. My name is NADIAH binti ZUBER and I will present about type of segment. The type of segment that our company use is geographical, which is the segmentation strategy due to the location that we select to establish our business. Next, the chief of decision making and its responsibility. The chief of decision making identifies a function and also not necessarily a person. That function is responsible for allocating resources to and evaluating the performance of the operating segments. It is likely to vary from entity to entity, whether it may be the CEO, the Chief Operating Officer, the senior management team, or the board of the directors. The Chief of Decision Making responsibilities is first, advise the board to ensure that the group business strategy takes sustainability into consideration. Second, develop and recommend to the board of sustainability strategies, related policies and statements to approval, adoption and revision. Third, ensure that sustainability strategy address key sustainability matters related to environmental, social and governance. Fourth, monitor the implementation of the sustainability strategies as approved by the board. And the last one, oversee the preparation and development of sustainability disclosure as required by Bursa Securities. To reproduce a segmental report, we use two testing, which is 10% threshold test and 75 threshold test. The original segmental report by Universal Malaysia Berhad is using on a profit or loss basis. So we come up with our new segmental report by using revenue basis. Our segmental report consisting of operating segments. After performing 10% threshold test, we found that there are 4 reportable segments and 1 non-reportable segment. Leisure and hospitality, property, investment, and oil and gas should be reported separately since the reported revenue sales to extra customer plus intersection is 10% or more of combined revenue of all operating segments. However, plantation does not classify as reportable segment because it does not meet 10% threshold test and need to disclose as other segment activities. That another test must be performed is 75% of total revenue requirement. The formula is external revenue of reportable segment divided by total external revenue. The result shown 99.23% exceed the 75% requirement. Therefore, no additional segments to be reported. As shown in the table, there are 5 reportable segments. Apart from that, we have discussed to allocate other income and expenses such as depreciation, finance costs, and other expenses according to operating segment.
So this is the conclusion of segmental reporting. First, transparency is a key advantage of segment reporting. For business like Parkway that operate in different categories of segments, segment reporting can reveal which areas are profitable and which areas are losses, so that the company management can take some action and initiative to maintain the segment's profitability and increase the profitability of other segments. Second, segment reporting enables the shareholders of Parkway to gain a better understanding of fluctuation that may affect the company's overall financial statement. For instance, if a company reports earnings that are significantly higher than anticipated, segment reporting reveals the source of this earning. The shareholder may examine the same report to determine whether the numbers are sustainable. It is intended to assist investors in understanding the company's future cash flow. However, there are disadvantages that should be highlighted, such as the foundation of segmentation. The definition of diverse businesses for segment reporting is a fundamental difficulty in segment reporting. Segments may be formed in a variety of ways, depending on the segmentation basis. Sometimes, segmentation may be difficult to detect. Customers can be segmented based on organizational divisions, industry, market, and products, among other factors. Each base has its own difficulties and limitations. Last, data manipulation is a second disadvantage. The information from segmental reporting can be modified and reported based on the perspective that management desire for users to see. If data is presented through the eyes of management, segment reporting, for instance, is susceptible to data manipulation. As a result, users of financial statements will have an inaccurate perception of a company's success. The ability of corporate leaders to control the construction of segments and the release of metric is another instance of data manipulation. For example, in order to attract shareholders and investors, management would distort and alter the statistics.
Next is about interim report for Mfrs 134. The financial statements of the group and of the company have been prepared in accordance with Malaysia Financial Reporting Standards, which is called as MFRS. This company also uses International Financial Reporting Standards and the requirements of the Companies Act 2016 in Malaysia. For historical cost basis, the financial statements have been prepared on historical cost basis except otherwise disclosed in the accounting policies below. Para 9.22 of Bursa Malaysia Securities Berhad listing requirement are also used for the preparation of the interim report. The financial statements are presented in Ringgit Malaysia RM, which is the company's functional currency. All values are rounded to the nearest thousand except when otherwise indicated. For accounting policies used in preparing the interim report, this company has used MFRS 60 leases and MFRS 116 property, plant and equipment in preparing this report. For MFRS 16 leases, the practical expedient only applies to lessees rent concessions occurring as a direct consequence of the COVID-19 pandemic, and only if all of the following conditions are met. First, the change in lease payments results in revised consideration for the lease that is substantially the same as or less than the consideration for the lease immediately preceding the change. Second, any reductions in lease payments affects only payments due on or before 30th June 2022. There is no substantive change to other terms and conditions of the lease. Next, for MFRS 116 property, plant and equipment, it will be measured using the revaluation model method, which is cost less accumulated depreciation and accumulated impairment losses. The depreciation of other assets is calculated using the straight line method. Subsequent costs, it will be included in the asset's carrying amount or recognized as a separate asset as appropriate only when it is probable that future economic benefits associated with the item flow to the group and the cost of the item can be measured reliably.
Next, types of interim report prepared by Genting Berhad. First, condensed consolidated income statement. Number 2, condensed consolidated statement of comprehensive income. Number 3, condensed consolidated statement of financial position. Number 4, condensed consolidated statement of changes in equity. And lastly, condensed consolidated statement of cash flow.
Next is the period for the current and comparative of each statements prepared by the company. Genting Berhad accounting period will end on 30th June every year. According to MFRS 134 interim reporting, the current and comparative period of each statement will be measured from 1 January 2022 until 30th June 2022. It is equivalent to the first quarter for the year ended 2022. For statement of financial position, SOFP, the current interim will be measured at the end of the current period, which is 30th June 2022. So the reporting period will be 12 months from the 1st July 2021 to 30th June 2022. It is because the report is made at the end of the period, which is the first quarter of the year. For statements of profit or loss and other comprehensive income, for current interim, the reporting period is 6 months, starts on 1st January 2022 until 30th June 2022, while comparative is from 1 January 2021 until 30th June 2021, which using the same quarter from the previous year. For second requirement, which is cumulative current year, the reporting period is 12 months that starts from 1st July 2021 until 30th June 2022. It has to be the same for comparative except it is from previous year 2020. For statements of cash equity and statements of cash flow, it has the same reporting period, which is 12 months. For cumulative current year, the reporting date starts at usual date, which is from 1st July 2021 until 30th June 2022. As for comparative report, it has the same reporting period except it uses the previous year.
Adjustment made by the company to be included in the interim report. The first adjustment is inventory. The price of the inventory tends to be vary each year. The net realizable value of the inventory is 791,871 as at 30th June 2021. The expected net realizable value of the inventory as at 30th June 2022 is 643,959,000. For the adjustment, as at 30th June 2022, the cost 791,871,000, net realizable value 643,959,000, to be stated at the lower of cost and net realizable value. Therefore, value of the inventory is to be adjusted to the amount of net realizable value, which is 643,959,000. Next adjustment is trade receivable. Genting Berhad prepare quarterly interim report current year ending 2022. The account receivable amounted to 2,840,601. As at 30th June 2022, the company estimated the amount would only be 80% collectible by year end. For the adjustment, as at 30th June 2022, the amount 2,840,601, net estimated amount collectible 80%, amount to be adjusted 2,272,480.80.
Prepare and extract any one of the financial statement to show the effect before and after adjustment.
Genting Berhad, Statement of Financial Position, extract as at 30th June 2022. We can see the amount of inventory and trade receivable before and after adjustment. Before adjustment, the inventory is 791,871,000. After adjustment, 643,959,000. There are decrease in inventories amounted 147,912,000. Next, before adjustment for the trade receivable is 2,840,601. And after adjustment, 2,272,480.80. There are also decrease in trade receivable amounted 568,120.20.